So in this video, we want to take a quick look at Apple because there's something that looks to be pretty promising or potentially profitable on the line. So let me just talk about the fundamentals real quick, and then we'll get into the technical breakdown of what's in front of you. So before we do anything, just an analyst rating. And I usually kind of do my technicals first and then my analyst ratings and news and fundamentals second. But right off the top, I'm just looking at TradingView, and they have a quick little analyst fundamental setting off to the right under this option here. But they do have it as a buy, almost to the degree of a strong buy. They're suggesting a 1-year price target of $254.02. Now, remember, that's just one analyst, maybe that is providing data for TradingView or whatever their data source is doing. But if we were to look at them, that would suggest that where we are now, depending on how far price action continues to drop, or if it has found a level of support, then you can expect price action to push up to $254, okay, which is right around here somewhere. Okay, so they're saying that you can expect a full recovery of Apple, basically. Okay, so that's what they're suggesting. But if that is to happen, we want to talk about how Apple is going to get there. Before we do that, as you saw me kind of challenging their price target, which I am in agreement with, and you'll see why when I get into the technical breakdown and what's potentially possible. While I'm looking at the other news for it, when I look at the news for Apple, somebody has an even more aggressive price target, and that's this right here. Apple price target maintained with $325. Okay, and that seems a little bit more likely, and I'm going to talk about how we could potentially get even that 325, which would have price action way up here somewhere. Okay, now that is a reach. That's quite a reach. All right, so now that I've gotten all this little fundamental and these guesstimations and stuff away, let's talk about actually what's going on in front of us. And of course, in true Harmonic Trading Club fashion, we're going to jump right into it because it is one of the most probable ones that you can find, and that's going to come in the form of a bullish GARTLEY pattern. So as you saw, I already grabbed the Fibonacci retracement. I'm going to take the time here to go ahead and teach once again on the most amazing pattern that can be found in the market. Now, I do have a bias and a liking for some others, but statistically, the GARTLEY pattern is like the top dog that stands out because the founder of it, H.M. GARTLEY, it's called the GARTLEY pattern. He suggested that over his 30-year back testing of the GARTLEY pattern, that it had a 70+% win rate, meaning winning 7 out of 10 times. So let's see if that could potentially apply to Apple. Mind you, before we go any further, I want you to remind yourselves that there was a disclaimer at the beginning of the video reminding you guys that we do not provide trade signals, give trading advice, or manage capital for anyone, and that you should consult a financial professional of your choice before investing your capital into the very volatile financial markets. Okay, with that being said, what you saw me do, remember, we're just going to go ahead and run through the rules of engagement here on the GARTLEY pattern, which is identifying this impulse leg here. Okay. Identifying this impulse leg, and then of course being curious enough to want to know how far was this retracement. And I did measure that. I'm not sure if you saw me do it, but it came down to the 618 retracement golden ratio that I have plotted out in gold. So the next thing that I would want to do is this is going to give us a valid B leg. Let me just say that it's going to give us a valid B leg. Let me clean that up. That didn't come out so right. All right, cool. So that's going to give us a valid B leg. Now, this, of course, would have been X, and this would have been A. So let me do that real fast. This would have been X of our GARTLEY. This would have been A of our GARTLEY. So XA, this would have been a valid B leg because it hit the 618 retracement of X to A. Okay. The next thing we will want to know is this up here, which would be C, is this valid? And that takes a 618 retracement of A to B. So just grabbing the retracement tool again, and I'm only doing this for the sake of having another opportunity to teach the Gartley pattern for someone who hasn't been through that class in the Harmonic Trading Academy playlist. And I will post a link to that in the description too, because that's what we're referencing here. But anyway, so X, A, valid B, valid C up here, right? Because you see that the A to B retracement did hit the 618, must hit the 618, could have went as high as A, but cannot exceed A. So this is actually lining up pretty perfect, okay? So then the next thing I would want to know is, okay, did we get to D yet, right? Which would be the completion and the entry, because this is going to be a counter trend trading opportunity to try to hit those targets that were suggested in the fundamentals. Now, if you haven't seen the video, the way to get to D is there's 3 ways, because you want to have 3 things line up in the same spot. And again, you can get this in more detail in the How to Trade the Advanced Gartley Pattern video in the Harmonic Trading Academy playlist. But the way that you get to D on here, your D leg, the completion of the pattern, is 3 ways. The first one is a 127 extension of A to B. So grabbing the Fibonacci extension tool and measuring from A to B, and I said it's the 127. Notice that for some reason price action comes down exactly to the 127. Okay, the second way is using an A to B is equal to CD pattern, which are the principles in which the Gartley pattern are built off. So I'll just grab a line tool and I'll run it from A to B, or swing high to swing low there, right? And then if A to B is equal to CD, that means it's an equal measured move. So I'll clone A and B, right? I'll clone A and B. And then I'll drop them on C if A to B is equal to C and D. And then notice it's coming right down here near the 127. So the A to B is equal to CD pattern is confluent, lining up with the 127 extension of A to B. So that's 2. The next thing I would want to do is, remember when I made that retracement of X to A to validate my B leg? I would just go and take that and bring on 786 to see if he too is in the same area. That way we're getting 3-star confluent. We got the 786 retracement of X to A lined up with the 127 extension of A to B, also lined up with the confluence of the A to B is equal to CD pattern, all dropping into the same spot. Okay, this gives you what is known as the 222 Gartley pattern. Not all Gartley patterns are the same, right? So the 222 Gartley pattern is the one that we see here that I described, that H.M. Gartley built this technique off when he found it. It had to meet these exact requirements. And when you have those 3 things line up, that's where he said that this would win 7 out of 10 times. So with those things being said, I'm going to go ahead and use the XABCD tool and throw his body on here, right? So coming from X, and then we'll go to A. And it's rare that you get them this perfect. This is a beauty. This is like perfection, and it's a good company to Apple. And then I'm going to go as far down as you saw where the wick reached down there and filled. Now, there's a couple of other filters that I would normally use to try to, build up on the probability, or to get even a higher combined technical score. And if you want to know more on that, I do have a video on the combined technical scoring system, or CTS, which teaches you, okay, even though you have something, how do you rate it? How do you grade it? What kind of score are you giving it? So the pattern is complete. Okay, the next thing I would want to know, I would go ahead and bring on the relative strength index. Oh, sorry, it was already there. Let me take this one off. Would bring on the relative strength index. Okay, and the next thing I would want to know is it oversold, which it is. Okay, the next thing I would want to know is there bullish divergence? Is there anything telling me that this is going to push up? So price action is coming down, but I would want divergence to show me that it's pushing up. Now, unfortunately, we do not have the bullish divergence. So that's kind of like a ding on this one, even though everything else is lining up perfect. The next thing I would want to do is I would want to look left. Okay, look left structurally clues and see if there's any other structure that lines up with my entry. There is just one, because we're so high up in price action. There is one point right there that also lines up with it. So this thing is filled and ready to go. And there's a couple of other things that I would do on this to try to look at targets. Okay, so one, I'll just do standard target projections, which would mean basically your standard take profit 1 and take profit 2 orders. Okay, so if I did that, it would look like this. I'm just cleaning a lot of this other stuff I don't need just to keep it all clean for us. So targets would be based off the A to D. The entire A to B is equal to CD move, and it'd be 2 for the TP1 and the TP2, and they would look like this. Meaning the 382 and the 618 are all I need. The 382 would be TP1. And the 618 would be TP2. Or take profit 2. Okay. So that's how that would look. And if I were to kind of like write that up using basically, let me just do this real quick. If this worked, now let me say something else. Even though we don't have the bullish divergence, I am on the daily chart, so I can jump back and check a smaller time frame like the 4-hour. But noticing that after it did fill, okay, and we're on the daily chart, that today was a green day, meaning that something is going on. There's one other filter I would bring on just to check, and that would be the volume to see. And of course, there was going to be bullish volume in there. I just don't know if it's all the way ready to go yet. I just know it's very, very close. Okay, and I don't really see a reason that Apple should continue to fall, especially looking at some of their news and the fundamentals and this very powerful GARTLEY pattern being filled and ready to go. The only thing that we're missing on here is bullish divergence, meaning even though it looks like price action is going down, RSI is not telling us it's going up yet. We really, really need that divergence. Is this something that I would be aggressive on and probably take anyway? I would say for me, it would be kind of hard to pass this up. I'll be honest with you. Something this perfect, because you don't see these opportunities too often, and I would hate to miss it. But again, the last thing that I was going to do was jump back to a smaller time frame like the 4-hour. Okay, so now that does satisfy our when you jump back to the 4-hour, which could be used as the time frame too. Now, if you notice, we do have our bullish divergence. So now we've met most of the criteria we would need for a high enough combined technical score. Okay. And then even on the 4-hour chart, it looks like, you could break it up. You see, you basically had, these two make up for today. So once this thing came down and filled, basically today it had 2 green candles. Would have made a trader happy just watching this account go from 209 to 213. Sounds like a little bit. Trust me, it's not. And then 2 green bars on the volume. Okay. So got all that stuff out the way. One more thing that I wanted to do on this, since we're done with the fundamentals, we're done with the technicals, pretty short video with just a quick projection for Apple, is I wanted to talk about seeing how could we get up to what they said. I'm very interested in that range. Now, mind you, we already know that if this is successful for us in the standard trading fashion, that we could expect to get up to 240, which is it's somewhere in the range of that first one that they talked about. We'd have a very, very tight stop there. I'm not going to do the ATR based stop to really set it up. There's a lot of room. This is an efficient pattern. There's a lot of room for this thing to breathe, right? So I don't necessarily need to worry about having a stop like under X, like typically. That'd be giving it like too much. I wouldn't want to have such a drawdown on an asset that's so expensive in the $200 range, and then you're just drawing down into the 190s. I wouldn't want to do that. If this thing ain't gonna work, I'd rather say go ahead, let me out after a few dollars and let that be. But everything is lining up. But remember, again, what I was interested in was how could we get up to that $300 projection or whatever that was. And there's a couple of ways to look at levels that would be way up there, and we would be using the extension. So starting from X to A, I'd run the extension off that. I'm going to do this in 2 stages. The first thing I would do is run an extension from X to A. And I just use one level. I'm going to bring on all 3 levels, but only one of them makes sense to me right now, at least. Okay, and that'd be the 127 extension, right? That'd be the 127 extension, and that would look like coming all the way up here, right? So if I were to take our tool and extend it, it would look like this, okay? The thing about it is I'm not confident enough to go way up there to that 1618 extension of X to A. I just don't see that. That's kind of like out of the range in which you would price something like this. So a maximum 277 would be the actual real target that I would project. These would be like kind of like if you're just being a little bit passive. These are almost a given. I'll say that 240, but that's still a great trade to come from 213 to 240. But the 277, which is in the range because we're trending. Okay, so that's why you use the extension. Now the other way to kind of satisfy that curiosity would be, let's say I took that off, and let's say I came here. The structure is kind of like a double bottom here, and people understand this is why market structure is so important. This double bottom type action here. So looking at this point right here in structure, right? It's kind of like where the whole move actually begins. So if we run our extension off that's going to tell a different story, and that might make more sense when looking at those higher 325 projections. So if we do that, if we run extension off this low, basically measuring the extension from the whole move, swing low to swing high, okay, then now at that point, that's where that whole 320 comes into play. So it actually does make sense. It'd be an aggressive long-term hold. Remember when I was looking at the news, that was their 1 year projection. So if this all works out like that, and I will leave that question mark here because that would be a very, very amazing year for Apple and an amazing year for a trader if this were to work out like that. You'd have something very special on your hands. And that's why I wanted to come take the time to look at this and talk about this, because rarely do you see opportunities this amazing. So I should have asked that you like the video as soon as you came in, but give this one a thumbs up. Let the algorithm shoot this out to other people who might be interested in this. There was, of course, a GARTLEY training in here. There's some Fibonacci retracement and extension training in here. We could even turn this into some A to B is equal to CD training in here, which there was when we made the pattern. But if A to B is equal to C and D, let's just do this one more time and we'll be done. Then that also is going to sit us right up here, close to around $300 just off the A to B is equal to CD pattern, while the full extended move would take it beyond that to about $318. So like the video, give it a thumbs up, subscribe to the channel if you're not subscribed, share the video if you know other traders out there who might be interested or wanted to get a very good projection on Apple, wanted to know what was going on with Apple, what might be at play. At least now you know, or we never know, because this is a different climate we're working in. None of that stuff could happen for us. So we got to be honest with ourselves. Sometimes we can do what we're supposed to do, but it doesn't always work out in our favor, no matter what type of probable situation we put ourselves in. So again, like and subscribe, share the video. Oh, turn your notifications on so you can be notified when I put amazing videos like this out there. All right, you guys take care, be safe, and I'll see you on the next one.